Good evening, everyone, or good afternoon, maybe even good morning. I saw some people joining from the States, from Asia, from different countries in Europe. So wherever you're sitting, be welcome in the session, in this second session, actually, of this series of three live chats on the topic of thriving through turbulence. So for those of you who weren't with us for the first session, my name is Karin Peters. I'm a professor in strategy at Vlerick Business School, and today I'm joined on stage by two of my colleagues, Filip Abraham and Leonardo Meeus, but we also have other strategy colleagues in the room, as we always say. Then for nasty questions, we are going to refer to our other colleagues, right? So the goal of this series is really to try to take a kind of a step back and put the current crisis we are kind of all still facing a little bit into perspective. So the first session we really started with the core of the issue, the crisis itself. And we had Martin sharing some thoughts and good practices about how to manage the crisis. We also talked together with Kurt about how would the crisis potentially affect the strategy of your company. So today we're going to try to maybe take a bit more of a distance. And again, I have my pointer, yeah. A bit more of a distance. We're going to look together with Filip on how the COVID-19 is affecting really the global economy, or at least what we know about the impact of COVID-19 on the global economy so far. And we're also going to drill down a little bit on more specific and maybe more concrete consequences that the crisis may have on international activities of companies. And I'm sure you do feel some of that as well in your respective organizations. And then we will turn to Leonardo, who is going to talk about the topic of how this crisis might also, in a sense, affect your relationships with external stakeholders of your organization. And we're going to look even more broadly at society at large. And when we get to society at large, then we are going to also address the role that governments may actually play in maybe, let's say, shape our way out of the crisis. So this is what Leonardo is going to talk about. And just maybe to give you a heads up on what will be coming in the last one of those sessions that we have planned. Together with Kirsten on June 8th. We are going to look maybe even more in the longer term and see how strategy might not just be impacted today by the crisis, but how hopefully we can also turn strategy into being part of the solution and see how we can design an effective strategy to help us kind of succeed in the longer term also. In this, what we sometimes call the new normal or the next normal. But that will be for the next session. So for today, this is the panel we have. So we are all professors at Vlerick in touching different facets of strategy, and you're going to learn more about the specific expertise of Filip and Leonardo in a moment, but maybe just a few facts to start with. If I have to say one thing, maybe on Filip. Filip is our Vice Dean for Focus Strategies, which, as the title indicates, means that Filip does not only teach about strategy, but is also very much involved into the strategy of Vlerick, and Filip is also sitting on the board of several companies, so very much active with the hands dirty into strategy, if I can say it that way. And then Leonardo, well, I think Leonardo is also known within Vlerick as Mr. Energy. Not only does he have a lot of energy, you're going to feel that in a moment, but Leonardo is also heading our energy center. So the center that basically brings together companies from the energy sector from all across Europe around research projects and all kind of different activities relevant specifically for the energy sector. And for me, well, You may have learned already from a last session that I discovered the world of basketball when I started my career at Duke University, but there is something else that I discovered at Duke University, which is the world of strategy. And this is what led me to then become a professor in strategy. And I was first at Solvay Business School. For those of you in Belgium, you probably also know that name, and later joined Vlerick Business School. So today we're going to talk about the economic and societal effects of the COVID-19. And just like for the previous session, we have received many questions from you in the registration process, so really thank you for that. We are going to organize them around two main themes. So first, Filip is going to really focus more on the economic effects and also the consequence for international business strategies for companies. And then Leonardo is going to talk about more societal effects and the role of governments. Now, this is just a sample of the questions we received. There were many more that we will try to address as well, but I'm sure you also will have many more questions today. Or you might also have some insights that you want to share with us from your own experience dealing with those issues. So please feel free to do so. We have let all the possible communication channels open on Zoom. So it's very nice for those of you who have already started to share their video. We have the chat box open for any question you would like to ask, and we will try to address them as we go. We have also prepared a couple of polls to get your perspective on some of the topics. But also for the moment, I think you're all muted, and maybe that might be good to keep it that way if you don't want to speak, so we avoid the background noise, but please do not hesitate to also unmute yourself if you want to participate in the conversation. We would very much appreciate that as well. So with no further ado, Filip, I'm going to leave the floor to you, and I'm going to monitor closely the chat box.
Okay, thanks, Karin. Let me see whether I can make you share my screen. Share my screen, that's what I wanted to say. Thanks for all being here in various places where you are in the world. So what I will do is, as Karin was introducing me, is I will look first a bit at the macroeconomic impacts, and then afterwards I want to discuss a bit about the consequences for international business and international strategy that is being discussed as a consequence of COVID-19. Maybe starting with the macroeconomic impact, there are knowns and there are unknowns. What do we know so far? We have by now a relatively good idea what the quarterly results are for the first quarter, which is not surprisingly because it's already over, and then also already approximately for what we expect in the second quarter. And the message is very clear. We had some effects in the first quarter already, but the bulk of the negative effects that we are observing in the data so far is now in the second quarter. We have more or less accurate predictions for what may happen in 2020. So we start to having estimates around from what can be expected for the remainder of the year. I'll come back to that in a moment. We also know that all countries suffer, but some suffer more than others. For instance, if you look in Europe, then if we would look at it, we see that clearly the impact on countries like Spain and Italy is going to be much more pronounced than when you look at countries like Denmark or Germany and so on. We also know that the sectoral impact varies substantially. That again is not surprising. If you are in the restaurant business or the airline business, it's clear that you're going to suffer and that you have suffered a lot. On the other hand, if you are in the sector of logistics for protective equipment, then it's clear that you're not suffering and that as a matter of fact, your business may even expand. And if that's true for different sectors, that is also often true between different companies in the same sector. And there the message is a bit that those companies usually that already had a tougher time before the COVID-19 crisis have an even tougher time now during the COVID-19 crisis. And then one of the questions I received beforehand was, how can you compare what's going on today with the economic downturns, depressions, recessions, whatever you want, that we experienced before? And now the evidence is that if you look at the impacts on gross domestic product and so on, that this is comparable. The last time we had an equally strong reduction was in the Second World War. But of course, in the Second World War, everything got destroyed, which is of course not the case. The infrastructure is not destroyed now. But the impact so far is stronger than what we experienced in the 2007-2000 financial crisis of somewhat more than a decade ago. So it is COVID-19 so far is a very bad one. So those are the things that we, macroeconomically speaking, know more or less. What are the three main unknowns which make it hard to predict what's going to happen? Well, the first one is the behavior of the pandemic. To put it simple, how many more lockdowns are we going to have? It's clear that the pandemic will flare up again, presumably later this year. We don't know, however, whether we will see a return to some kind of lockdown and to what extent that will affect business. The second unknown is we are only now starting to understand the degree of economic disruption and potential recovery that we may expect later on. We know that unemployment is increasing, but the impact on labor markets and also on bankruptcies of companies is starting to become clear quite now. And then assumptions, I'll come back to that, are being made about this occurrence, whether it will happen, and the strength of the recovery. What is also one of the key unknowns is the impact on national, European and global economic policies in trying to take into account, to counteract the negative effects of COVID-19. One of the key issues is what I would describe here as the sustainability of national policies. All countries have invested dramatically in trying to offset the negative impact of the crisis by temporary unemployment schemes and so on. That has increased the government expenditures and government debts and deficits considerably. And the question is, how long can countries continue to do that? Another thing is that we all know that the European Central Bank, now I'm speaking for the Eurozone and other central banks in the rest of the world, have all done a massive effort to engage in what is called here interest and liquidity policies, to make it simple, that to make sure that the markets are swamped with my money and that interest rates stay very low. The question is whether that policy will be continuing and whether it will function, yes or no. And then the last one, and again, this is more for the European situation, is to what extent are the European institutions helping countries to overcome the problems that they're facing now. And today is a very interesting one because the Commission President, Mrs. von Leyen, has announced that there would be a 750 billion euro recovery package in addition to what was already announced before. Now, if that really is going to be accepted by the member states, it may help countries to overcome the corona crisis, and it may also make it possible for them to continue to get access to capital markets. So there we are, we have knowns, we have unknowns, and then the question is, how then are you going to balance the knowns versus the unknowns and try to make what you could call a scenario building. And scenario building is happening now everywhere in macroeconomically speaking, but also in companies. And in macroeconomically speaking, you have them from central banks or statistical offices, from national governments, from private organizations, and so on and so on. I looked at a lot of them and I tried to get some insights and take one example of one that I find relatively representative. Now, important if you want to understand those kind of scenarios is what I call here the ladder game. And so everyone is trying to say, what kind of macroeconomic shape will we observe in the next couple of months and next year and even 22 afterwards. And the optimists, they say, well, let's go for the V. V means you have a relatively, you have of course now a recession, but then relatively soon, presumably already this year, you see that there will be a recovery so that the economic activity will follow the shape of a V. Somewhat less optimistic, already is more pessimistic, is that you're going to have a U form. And that means that you're going to have a sharp reduction right now. And then you're going to have a period that is where you stay at a very low level, and only then afterwards you get a recovery. Then even more pessimistic is this: we're going to have an L. And L means you have a very sharp crisis now and no recovery next couple of years. And then the last but not the least one on the letter game nowadays is a W. And a W has to do with the idea that we may have seen some new lockdowns or flare-ups of the virus. And then you would, W means you have a reduction now, then you may have some recovery, but then the next flare-up of the pandemic happens and you go back to economic hardship, and then only then afterwards back up. So that's the kind of W that is put forward. Now, of course, when you have all those possible scenarios, you have to make choices. And a lot of the scenarios that I have seen, they work with three important cases, three important scenarios. First of all, there is always the base or the core scenario. Then there is the pessimistic one, and there's an optimistic one. Now, I checked, I've taken one of the scenarios that one of the scenario building from Belgian bank KBC. And if you look at their core scenario, it's what I could call a slow V. And that means you're going to have now the negative impact, and gradually, but it's going to take time, you may go back next year to a better situation, right? I'll show you some numbers in a moment. Then their optimistic scenario, but they don't believe in it anymore in the latest writings that they have done, is that you would have a fast V, meaning today you're going to have a relatively mild recession and very soon it will return to normal. And then the pessimistic scenario, and that becomes more and more the one that people are talking about, is that you would have a situation where you may have a W or an L scenario. Now, let's assume that we put some numbers to it just as an example. This is what KBC does, and you can compare it with other scenarios. I think there, if you look at what you see at the scenarios of central banks, the IMF and so on, I think this one that you see here is relatively representative of what the others are predicting, although it is a bit more at the conservative, call it the more negative side. Now, what do you see here? You see from 2019, the real numbers, the real GDP growth numbers in those years. That's, of course, data that we already know. And then you see this is for a group of Eurozone countries and for the whole Eurozone. And then you see the differences for 2020, 2021. Now, not going to look at all those numbers, you can take a look at it yourself, but maybe it is important to say something about the three scenarios. The optimistic one would mean for the Eurozone as a whole that you would see this year real GDP of the Eurozone countries on average to decline by 6%. But then next year, you would see that it would return back to normal. And already that recovery would already start this year. So it would gradually start. And so by the end of next year, everything will be off, okay? Optimistic. The core scenario is that you see immediately that the impact on this year is already minus 11.3%, which is a big number if you think about it. And then the idea is that gradually into 2021, you will find that most of that will be recovered by having an increase of GDP by 11%. And then the pessimistic scenario, and everyone is talking more about the pessimistic scenario, as I already mentioned. There you see that the impact this year will be 14% for the Eurozone. And then recovery in 2021 only will not happen. You will continue to have another decline of 3.2%, and only in 2022 and later on. And that means in macroeconomic forecasting is that's eternity, and that then you may have a recovery starting to happen. You see, this is just to give you an idea what the different macroeconomic studies are telling you. Now, maybe this is the moment, Karin, to launch a poll, because it's nice to look at those macroeconomic numbers, but you are in different companies and organizations, and we would like you to ask the questions that I put here. What is the impact of Corona on your business? Are you better than or similar to the optimistic scenarios, similar to the core, similar to the pessimistic, or worse than the pessimistic scenario? See the numbers coming in.
Yeah, we're still waiting for a few votes, but I'm going to close it in a couple of seconds. Well, there it is. We see some clear trends, Filip.
Yeah, Karin, it's quite clear. It means that there are companies and organizations that feel that it's going to be similar or to the optimistic scenario or better, which should not surprise us, because as I mentioned, the impact on different organizations and companies can be very different indeed. But the most common one is, and this is good for the ones who make those core-based scenarios, is that about half of you say that your experience in your companies is more similar to what you see here, the core scenario. And then you have then another 20% that say, well, it's going to be similar to the pessimistic scenario. And then even 11% of people say, this is really worse than the pessimistic scenario in my organization, in my company. And that immediately shows you also that this kind of aggregate numbers don't tell you everything about what your organization is doing, but it also tells you some kind of a leeway, which is maybe true for the aggregate of the economy, is giving you some guide of what to expect, and may help you when you create scenarios in your own company. Now, this
but
was...
I guess, Filip, if I can just add that here it shows that because even the core scenario was about a recovery not starting before 2021. So I think as a conclusion for 2020,
that's it. We do not expect too many miracles this year anymore. This is another way of saying things. Yeah. And let's hope that it doesn't get worse than the core scenario. Okay. Now, so far, I think that that what I would try to do now is to, since also time is moving on and I want to leave enough time to Leonardo, I would like to go very quickly to the second important issue that I want to deal with, and that is if we think a bit about the global business landscape and the business strategies of companies that are operating in different countries. And we ask the question, what is going to change as a result of this COVID crisis? And you ask different people, you get very different answers. Some people are arguing nothing is going to change, everything will return, go back to normal. All the things that we have seen now are temporary. This is. Others are saying, well, no, some elements the world will be completely different. Tomorrow we will not recognize what is going on before the corona crisis. And then you have a group in the middle who say, well, some aspects will continue, and in other aspects we'll go back to what happened before. Now, what is my main insight that I want to convey to you? My main insight that if you look at what's going on in international business and in global relationships in general, that we already experienced main important trends in international business that have been taking place since the Great Recession of 2007-2008. And what are those? Those main trends are international trade is losing ground. That's one, and I will come back to each of them. The second main point is companies are reshoring, and I got several questions before on this issue, so I'm going to discuss it. And reshoring, with that I mean that they're going to produce closer to where their customers are being located. And the third point that I want to make is that digital globalization is going to take over even more than it did before. And the main element that I'm going to say is those are not new trends, but the experience of COVID-19 may, as a matter of fact, reinforce those trends. And so let's look at each of those three main trends and ask the question, what are we talking about? And then to what extent may we have that COVID-19 may reinforce these trends. Now, let's then start with the first one, and about international trade, trade in goods and services. What is going on already since 2007, 2008 is what is the journal or the magazine, The Economist, once called Globalization, meaning that the share of international trade in GDP is stagnating or declining. This is something we have been observing since the last crisis of 2007, 2008. Now, what are the reasons why that is the case? Well, first of all, we all know that we are now more in a protectionist environment than we were before. And secondly, governments have, as a matter of fact, intervened more intensively and extensively in the regulation of cross-border flows. I got one question about the financial sector. What's going on in the financial sector? For those people of you who are in the financial sector, you already have observed that as a result of the increased government regulations, engaging in cross-border activities in financial assets or in banking and so on has become less easy to do than compared to before. Now, if that's the case, if that's what we have been experiencing, then the idea that we can say is that COVID-19 will reinforce this trend if, and then there are two ifs, the trade conflicts become more intense, and if we see nowadays the fights between the Chinese and the Americans and also other countries reacting to this, you see that trade conflicts are indeed becoming more intense as a result of COVID-19. And then maybe also when in terms of regulations, there is of course this movement that health regulations are becoming very important and they may become stronger and stricter. And as a result, several cross-border flows may not be as easy as before. So those are the two arguments that are being put forward. Now, coming then to the reshoring question, what can we say there? Well, as I mentioned already, reshoring has been taking place since 2007, 2008, meaning that several companies are relocating production activities close to their home market. That doesn't mean necessarily to the country they come from, because where do countries come from, but to the region where most of their customers are being located. That process has been going on already for several years. There's an excellent study by McKinsey Global Institute that shows that convincingly. The reasons for that, well, political pressure, Trump America first, but the Chinese are also doing the same thing, and the Brazilians and India is doing this, putting own strategic interests first. And then another one is a technological reasoning. In terms of robotization, let's say that, give that example, if it's true that robots can replace a growing number of manufacturing and other activities, why would you still outsource them to a faraway country? So why not keep them at home? Because if robots can take over some of what you would have outsourced before. And then of course the impact of trade conflicts. Now again, that's what's being taking place already since 2007, 2008. The question is, how will may COVID-19 reinforce this trend? One of the things is that companies have experienced the over-excessive dependence on China and are diversifying to other countries. And diversifying to other countries may mean that they diversify to other Asian countries, but also several companies are asking, well, maybe we do part of our production close to our home market in Europe, in the US, back or so on. The other thing is that here the prospects for emerging economies are not as good as they used to be before. Several emerging economies are suffering as a result of the economic crisis now, and therefore become less stable and less attractive as place to organize your value change. And then the last one is what is called a just in case rather than just in time. For those of you in logistics, just in time is what you wanted to reduce your inventories. Just in case means that you may have decided to have some strategic inventories in case that trouble starts, that you can continue your normal activity. So those are the arguments that we are put forward in that respect. And then the last one, and then I give the floor to Leonardo, is what is called digital globalization. Again, what is the evidence? Since 2007, 2008, not surprisingly, more and more flows of goods, services and people are being offered in a digital way. That is what we have actually experienced for several years. The idea is that this trend may be reinforced by COVID-19. Why would that be? I give you two examples. For instance, the international business travel. Why would you still go engage in international business travel if you're now used to using Zoom or any other program that allows you to do meetings in a virtual way? So that's one element. Moreover, it may become much more difficult with all kinds of cross-border restriction to organize business travel. Now, if this is true for business travel, it may be true for other flows between countries, not only goods, services, but also people and whatever, that may lead to less globalization in the traditional way, but more digital globalization. And the idea is that that would be also reinforced by COVID-19. I think that I have said what I wanted to say. It is important that after looking at those responses, that we now ask a bit the question also, what does it mean for the relationship between companies and society as a whole? And I gladly give the floor to Leonardo.
Yeah. Maybe, Filip, as we are switching to Leonardo, I want to also ask a question that was posted in the chat box, because when we see all those kind of pretty big implications of the COVID-19 on the economy in general, and we look at the results of the Bell 20, it seems that they are at pre-corona level. So we kind of see potential inconsistency, or does that say anything about the scenario, or are we missing something here?
First of all, Karin, it's true that they have recovered, but unfortunately for me, my meager investments are still not recovered to the level that I had before. But it's indeed the case. What we have seen is that part of the very strong decrease in stock prices have been offset gradually by recovery. In the last couple of days, we have seen, as a matter of fact, in most stock markets, gains of, to date, was around 2% in the Euro stocks, if I recall correctly, and yesterday was similar. Now, there are several reasons being put forward. And first of all, we know that stock markets usually react a lot directly to big shocks. And so that maybe the initial downward shock of the stock markets was exaggerated. Means also that if another lockdown or another flare-up or whatever trade conflict starts, we may see again a big shock in the stock markets, which means that the volatility is really going up, and that's an element that we also have a lot of time. The second main reason is what is called there is no alternative, the TINA principle, meaning that there is a lot of liquidity in the market, in particular since central banks are adding liquidity by the billions, if not trillions of dollars or euros or British pounds or whatever. And that liquidity, central banks hope that it will go to companies in terms of increased loans and whatever, but not all of that is happening. And so that liquidity is floating around and therefore is being invested in those assets which are still feasible and which may or may not lead to a return. And that is another reason. You could say that there is some kind of a artificial propping up of stock markets as a result of the very large amount of liquidity floating around.
Yeah. So that also shows the disconnect between the stock market and the real economy. Okay, thank you, Filip. Leonardo, the floor is yours.
Thank you, Karin, and thank you, Filip. So happy to follow up. I would like to start from one of the questions we got. So one question I got was, how powerful are societies? And here, let me quote a statistic I like to use every time when I start my talk on this topic. And that's, you have an insurance company that does a survey every year among CEOs globally and asking them, what are the main risks you face? And they put always in their top three reputation and regulation or government intervention. So that's how powerful societies are, because you could even say that those two are the same. because if society is really not happy with what certain businesses or industries are doing, and the industries don't get their act together, at some point, these people vote, and votes determine governments, and governments make new regulations. So that's how important societies are. And I think the Corona crisis or the COVID-19 crisis once again showed how society can move, not only because we change from one generation to the other, but big events, big crises can really mean changes. And it also means that if people look at your business, they look at it with a different set of eyes. And that's how I also wanted to start. So I always like to say, you know, when talking about reputation, it's important to keep in mind that everybody that's here, I'm pretty sure we're close to 100. I'm pretty sure that this really nicely reflects how you see yourself. At least it's a bit how I feel once in a while. A bit underpaid, overworked, underappreciated, and concerned about the world. So, but I think we often forget how privileged we are, and that there is a large society out there, that we're just a happy few, and they see us a bit different. They see us as a bit more like this overpaid, spoiled, privileged, and plotting against us. And I think that's really important to keep in mind when talking about your reputation. And I have two examples for you of how, you know, when society changed, business as usual creates new risks because people look at your business quite differently. This, I think, is I don't know if you've seen that already, but Corona, by accident, the same beer with the same name as the crisis, had a marketing campaign that was running every year, coming ashore soon. And they thought, why not run it again, right? Around February, they were running this marketing campaign, and they probably had spent a lot of money in preparing it. But maybe they could have been a bit more sensitive to the fact that when they were going live with this campaign, the environment somewhat changed, and we were already facing quarantine measures in China, and the rest of the world was indeed waiting for the virus to come to shore. So maybe this was not the best campaign to do at that time, right? So I think this is a nice example of how business as usual is not always an option when everything around you is changing. Now, is reputation always a problem, always a risk? No, really no. I think working more closely with your external environment can also create opportunities and shape your competitive advantage. And you know, that is not only valid for your business, but also your reputation. I don't know if you also are the proud owners of one of these masks you see in the picture. I was still swimming with them last summer with my kids, never knowing that these masks would be part of a crisis solution. You might recognize them as the Decathlon masks. They're quite cheap. And what turned out that in Italy, really when the peak was going on in Italy, and they really had not enough material, that there was a doctor there that asked a 3D printing company, a startup from Italy, if they could not print a little thing that goes on top of these masks so that they could connect tubes to it. And the additional advantage was that when blowing out the air, the patient would also, you know, the air would be captured not by the room, but in the mask and with an additional filter. And I think Filip already mentioned 3D printing. So here you can see 3D printing in action. Now, okay, they just got lucky, you could say, Decathlon, right? They didn't design this. They were not even involved in the 3D printing fix of their product, but they did see it as a reputation opportunity because they jumped on it. As you can see here, they blocked sales of their masks in their shops, and they made them available as a donation to the people that really needed them in different countries. And it's well known that when society has a crisis and a company can be part of the solution, it can really gain you an attention that is, you know, a multitude of whatever marketing campaign you would ever design and spend. It will never get the same attention as this kind of opportunities here. So crisis and thinking about what's going on can really shape reputation opportunities. I also said that government is important in the picture here. Many people say government is backed because government is asked to save the economy and also design a recovery plan. So I think all businesses should know what government is up to, what's the agenda, and how does your business relate to that. And I think you would be surprised that if you know the details of government, of how many businesses, even the ones that are maybe not fully aware of it, can be present themselves as part of the solution. And I wanted to illustrate that with the new European agenda from von der Leyen that has as priorities these 6 points. And I think there is a lot of businesses that fit under the first one, a European Green Deal. This has been presented as really a unifying man on the moon type of project for Europe, of the same scale potentially as the internal market we created across borders in Europe. And it touches on many, many sectors. So at some point it will come to you, but if you would engage now, you would maybe spot the opportunities. As you can see on number 3, also making Europe fit for a digital age will touch upon many companies and businesses. So one question is, of course, now what will happen to this Green Deal? I had a question from somebody saying, will this Green Deal be delayed now? Because we have more important things to do, which is save the economy. Can we even afford to have this Green Deal going forward? Well, there are 2 views currently. One is saying, okay, let's not call it the Green Deal anymore. Let's call it the Green Recovery Alliance. So this is not only 12 countries already subscribed to it, led by the Frenchman Pascal Caffin. Belgium is not one of the 12 that already signed up, but you see that it's not only governments and environmental ministers promoting this idea, it's also companies. More and more companies are joining this alliance. You had one at the European level, even banks, the financial service industry signed up with 50 of the main CEOs. A few weeks ago, and also in some countries you see people gathering under an alliance. Does that mean we will get something like that? Not necessarily, because it's still politically quite controversial, as you can see here from one of our local political parties calling it a mean deal. But it's key to know what's your position on this. That's why I wanted to launch this poll before giving my own opinion. So do you think that we can really combine this kind of recovery that we need, fiscal stimulus, with climate measures? Or do you think that, okay, now that we have to recover the economy, let's delay all the climate stuff? So what do you mean? So can you please vote if you agree or not? And let me launch this poll here. Okay. So now you should be able to vote. So do you agree that we can combine? You can strongly agree.
I think you still need to launch it, Leo.
Okay, so relaunch. Okay, here we go.
Yep.
I think most voted very spontaneously and very fast. I think we have everybody. Let's end the polling and share the results. So I think there is a minority that disagrees, and then the people that agree are split between strong agree and agree. Okay, so I will answer by sharing this study with you. So it's a study by several economists, and 2 names I think jump out. You have Nicholas Stern, one of the advisors to the UK government, well-known academic, and Joseph Stiglitz, also quite known because he won the Nobel Prize at some point. And they published a study very recently, 4 May, as you can see, which up to now is the most interesting study I found on this topic. And let me give you the highlights. So first of all, they revisit the previous crisis, the global financial crisis, and they check to what extent the fiscal recovery policies we put in place at that time, because also at that time we did quite a lot of fiscal stimulus in the economy, and they try to label them, like how green were they? And as you can see there, at that time, there were already quite some measures that in hindsight could be labeled green, but most were colorless and some of them were brown. Also to mention is that the study is an expert survey. And the experts there are the people that will design the current stimulus policy, right? So it's quite relevant what they think, not only based on their experience in the previous crisis, but also what they maybe don't want to repeat or do better in the next crisis, this one. And then this graph, I think, is the nicest one. So as you can see, it's a matrix. So you have on the vertical axis, the impact of the measures on climate, right? Positive or negative. And then you have on the bottom, what economists call multiplier effects, because it's well known that during a crisis, when some people lost their job, so we're not using the economy at a full capacity, there is spare capacity in the system. It's well known that when at that time you put public money into the system, that you can get more out than you put in. So if you put €1 in, that results in more than €1 as an output, right? So it's a good investment to do as a policymaker. And that is what is called here a high multiplier effect. Low multiplier effect means you get back less money than you put in. So that's something you might want to reconsider. And then, of course, the ones that agree or strongly agree believe that there is these measures that find themselves in the upper right quadrant, where you really combine high multiplier effect with high climate impact effect. And according to all these experts in that study, they exist, these kind of measures. But they are measures that take a while to put in place, because that's the other dimension of this graph, is the speed of implementation, and that's the coloring of these bubbles. So you can see that these measures in the upper right quadrant are of a darker orange color, right? So they take a bit of time to implement. That means that they are recovery measures, they are not rescue measures. The blue big dots, the letters O and the letters D, they are the things we did when we were panicking, right? When we had to rescue the whole system. And they typically have a high multiplier effect, but are not necessarily positive for the climate. And what is meant there is direct cash or liquidity measures, just to keep things going, right? And we've seen that with the loosening of temporary unemployment rules and all these kind of extra easy borrowing measures. Of course, we had to do that, but the idea of this study is that, okay, now in the next phase, if we go from rescue to recovery, we can design some of these measures that combine a positive climate and an economic effect. So I guess now you're quite curious to know what's behind those bubbles. And I listed a few here. As Karin said, I'm a bit of an energy expert, so you might think that it's a coincidence that he brings a study that includes a lot of energy, but the people writing that study are not energy experts, right? And you saw the people that were interviewed are people from financial background, ministers, central bank people, so not energy people, but they do put forward quite a lot of energy in there, because it turns out that one of the good measures in hindsight in the previous crisis was the subsidization of renewable energy. Why? Because it involves a lot of construction of ready available technology, which creates an employment. And the nice thing about these kind of renewable energy infrastructures is that they create employment immediately when you need it, but when the economy picks up, they need less maintenance. So at that time, you want the employment to go back into the rest of the economy. And this is what they mean with multipliers. Other typical things we know from infrastructure is transport, right? So that's what is called in that study, the S connectivity infrastructure. So Italy is an example where, for instance, a high-speed railway network was rolled out as an economic stimulus, and that has been a very positive experience. Closer to home, we are happy to see education there and R&D. So I guess as academics, that's something we are also happy to see in there. Okay, so I think
Leonardo, there have been a couple of questions shared in the chat box, and one came from Eve saying that okay, Europe might be going green, but what about the US and what about China? And those two countries have a big impact on the total effect that we're going to have. And any insights on that?
that's a nice one because it connects my expertise with the one of Filip. Because one of the things that is part of the European Green Deal is to make sure that the Green Deal does not destroy the competitiveness of our industry. And something we've not been doing so far is now on the table, which is a border correction. If we import products from outside of Europe and they have been produced with a higher carbon intensity than products over here, we would charge a border tax. And as you can imagine, that's politically quite sensitive, because even if we would do that according to the WTO rules, it might still cause retaliation. And as Filip said, there is already this environment that is changing internationally. So how that will play out, I do not know, but it's going to be one of the key elements, I think, in the coming years.
Okay. Thank you, Leonardo. There have been a couple of other questions. One from Stefan about your Decathlon example, and also asking about, do we know anything about the situation they were in before deciding to go with this opportunity? Whether they were opportunistic or not, we don't know. But what's kind of what was their situation when they decided that?
I really don't know, because I didn't have a direct contact with the company, but as you can see, it's a case that I would really like to develop. So if there is anybody here that is closer to that case, I'll be happy to follow up and do some interviews. But my impression, based on publicly available information, which is really limited, is that they had not really done any prior action, because it was a startup not connected to Decathlon at all, that did the retrofitting. But I know of other companies that did have a disaster relief plan prepared, anticipating that at some point, some type of crisis will happen. The best example, I think, is Walmart. They knew that at some point a storm would hit, and that they could play a big role during a storm as a kind of, bringing food to the people when they really need it, right? They are strong at logistics, and they had that prepared. So if you have it prepared, you can really seize this opportunity even more. But I don't know if Decathlon was prepared for that.
Yeah. That's actually a very nice bridge to the topic that we will cover for the next live chat, about going a little bit further long term and looking into scenarios of what might happen. And maybe a last one where I don't know if you have a perspective on that. So otherwise, I think it might also come back in the next session, is about gender differences on those topics, and the Green Deal, for instance, the environmental perspective and social perspectives.
So what I always say when I talk about this topic is that companies that have more diversity will be better at managing their reputation, because there is nothing so problematic for your reputation than a lack of diversity. And that's what in the literature is called the expert trap, right? So if you're all of one gender or all with experts with the same education, you tend to lose certain sensitivities. So something you do in your business that you got so used to as being normal that that you do not even notice that everybody around you thinks that this is unacceptable. So I do not necessarily see it only for the Green Deal. I see it as important for everything when you do manage your relations with the public and with governments.
Yeah. Okay. Thank you.
This was also the end of my presentation, so I think we can wrap up and give it to Filip to maybe highlight the key messages.
You're muted, Filip.
Okay. All right. So what did we learn? First of all, I see here a little. Advice should be with a C. I looked it up. So that even people at Vlerick make mistakes, not often, but here it is. For those of you who are interested in languages and right languages. Now, what did we learn, or what are the main issues from what we wanted to present to you? I think, look at the macroeconomic impact. I hope that I have convinced you that it is substantial, and that the economic recovery is not around the corner, unless something would happen that we would increase our optimism. It is not immediately going to happen. A second thing is that we observe structural shifts in international business, and the main point that was being made, that those structural shifts which have been happening are presumably reinforced, strengthened by the pandemic. And then Leonardo, the three other ones are from your presentation.
Yeah. So I wanted to give you as a final message that business as usual is really not an option when society changes following a crisis. And yeah, that's clear because maybe as a company, you're not fully responsible, or at least you should be responsive, right? So that's something I always like to say. You have corporate social responsibility, but you have strategy, and strategy is to be at least responsive when you have no other option. Then I think you can also be proactive. Now you've noticed that a crisis and how you behave as a company in a crisis is both a risk and an opportunity. I think you can prepare better for the next one, and to maybe think of how your business could be more present when there is a disaster, and how you can help relieve that disaster. And it doesn't have to be the next pandemic. It could be any kind of crisis societies can face. It can be the next, like I said in Katarina, it was a storm, but it can be any other crisis. And the last is that we do see that government is more and more thinking of this kind of green recovery. So yeah, I would advise all of you to think on how you fit in there, and can you be part of the solution and work with government in the coming years. Not only because then you could maybe receive some of those funds, but also then you can help shape future regulation, which will impact you anyway in a few years from now.
Thank you both for your insights, and I think the last 2 points create a very nice bridge to the topic of the next session, where we are going to also discuss to what extent we can see this crisis as an opportunity or as a threat, and what does that imply for organizations in the longer term. Leo, if you don't mind, I'm going to take over the sharing screen for the last conclusion. Yes. So this was our topic for today. We took kind of a broad picture on the topic of the implications of COVID-19. Thank you, Filip. Thank you, Leonardo, and thank you all for participating in the session. I hope to see you next time as well on June 8th, when we will have our last session on strategy for the day after, together with my colleague Kirsten Ferre. And in the meantime, I would invite you to have a look at our offer of online programs. We have a page dedicated to those online programs on our website. So if you feel like using the summer period to upgrade your skills in a domain, you may find what you're looking for there. And if really strategy is what you want, we will very gladly help you. There is another page where you will find all our programs in strategy, both online and face-to-face programs. But maybe even most importantly, do not hesitate to reach out to us directly with any question or reaction following this session. With this, if you have one last question, do not hesitate to raise it. You can even take your mic at this point, because there are so many thank you messages that I cannot keep track anymore of the chat box. But feel free to take the mic and ask your last question. If not, we're going to simply close the session for today. Thank you very much all for participating, and hope to see you next time.